What a week for the crypto market. First, we had Binance under attack by the SEC with some very serious allegations. And then just the next day, Coinbase was also informed they too were being sued. Well, apart from the amazing work being done by Gary Gensler to protect investors by making sure no one in crypto has any money left, Ark Invest just released their monthly analysis, and so in this video we're going to be looking at the key takeaways, including the key support levels everybody should be paying attention to right now, a very interesting chart showing what price point most people got into crypto at, so you can see how you compare, and a huge and concerning milestone just reached with consumer credit cards. Okay, so first up, with the crazy week of attacks on crypto by the US. Let's start there. So, by now you've probably heard that Binance and Coinbase are being sued by the SEC, which that in itself is quite historic. And what makes this such a crazy week is that we just had the news that China, well known for banning crypto, has opened its doors back up via Hong Kong. And as they say, as one door closes, another one opens. Now, these lawsuits are clearly an attack on the industry under the guise of protecting investors. But I think the only protection we all need is from Gary Gensler. Now, initially we did see a big sell-off in the market, but then amazingly crypto bounced back and made up the losses as investors have decided to side with Binance and Coinbase and not the SEC. Now, the truth about Binance will come to light over time. However, the Coinbase one is a bit ridiculous. The SEC claims they've been selling unregistered securities since 2019, yet the SEC themselves did a due diligence process on the company in 2021 and still allowed them to IPO. So it's a bit ridiculous. Okay, on to the biggest insights from Ark Invest for this month. So firstly, what Ark Invest believe are the two key support levels, and this is Bitcoin's 200-week moving average and also the realized price, which is the average price of the entire market. So we've got Bitcoin's price in black, and what a roller coaster investing in crypto is turning out to be. We've got the long-term 200-week moving average here, and in green is the average market price. So with the 200-week moving average, really historically it doesn't get broken. Very short time here, and then obviously in this last crash, and right now this stands at around $26,000, so very close to it today. And then the other one is the average price, again doesn't get broken until the deepest, darkest parts of a crypto winter. Most recently we did get this big bathtub drop here, and this one also is pretty much the same as another key level, which is the previous all-time high. So if we draw a line through here, and this one sits at the key level of $20,000. And I think anyone who's able to make a purchase under 20,000 has done very, very well. So what have most people bought at? Well, they also shared this very interesting chart as well. And this is the key levels where people have been buying and selling. Now, just note, this starts at around 1,300, and I think the inception coins are going to be miles higher, as some whales own huge amounts of Bitcoin. But once we pass this level, then this is most of the investors. So there's a big peak here, which is around this 27,000. And I assume they've highlighted that this is currently the 200-week moving average. Next big spike is here. And I think this is from the most recent drop where it got close to 15,500. And as it was just beginning to bounce back or on the way down, there was a huge amount of buying and selling. So just remember, with any trade, there is a buyer and a seller. So a whole bunch of people got in at this price, but also got out. And I'd say I definitely would want to be the buyer of this trade. I think these people have done very, very well. So how do you compare? With me, my lowest buy was when I got in 2017, and I would be around this $7,000 mark, my very first purchase. I also purchased after the all-time highs when it had had a big drop. My highest buy is around 40,000, and my next buy is if Bitcoin breaks below this 20,000 again. So a very interesting chart here. Now, more on the macro, as Ark Invest do see a hard landing coming, and this one was a survey done on large and medium banks. So this goes back to 1990, and the gray bars is the recession periods, big recessions here. So this is .com, this is Great Financial Crisis, and this was the brief one in 2020. Now, in black, this is the lending criteria. So as times get hard, lending criteria gets very, very strict. Going into recession, going into recession, going into recession. And then in green, this is the demand for the loans. And just note, this is commercial loans. And so also, when times are getting very hard into recession, demand drops, demand drops, demand drops. And what it's showing right now is that this pattern is repeating. You've got very strict criteria for lending and also demand falling. So this indicates what's previously happened, which is times of recession. And then something very interesting and also concerning going on with consumer credit cards. Now, in black is the credit card debt and other revolving plans. And this is to the tune of $200, $400, $600 billion. Then went up to 800 billion, and now it's pretty much about to cross a big milestone of $1 trillion. And if that wasn't bad enough, this is the average interest rate on that debt. So for a long period, people were paying about 12%. This went up to around 14, 15%. But then with the interest rate hikes that we've all just seen, this is now ramped up to 21%. So $1 trillion of credit card debt at massive levels of 21%. What could go wrong, right? And then finally, this is a chart which I don't see anyone else talking about. This is the S&P 500 going back many, many decades. These are the recessions punched in. And from what I can see, recessions are bad for risk assets. So you have the camp that says, no, recessions are already priced in, so don't worry about it. And if recessions were already priced in, then you'd see something like what happened here. So there was a drop. People probably said a recession is coming. It's already priced in. And markets rallied into the recession and through the recession. So that is the pattern that you'd want to see if recessions are priced in. The problem is, in the vast majority of time, markets actually go down in recession. So here's the last big one. It rallied up, hit recession, markets massively dropped. Same thing here, markets began dropping going into recession, and then once it hit, dropped even further. Same thing here, same thing here, same thing here, and pretty much the vast majority of the time, this is what you see. So from what I can see, recessions are not good for risk assets. So, never a dull week in crypto. We had China opening its doors back up to crypto, just as the US is being as anti-crypto as they could be by suing two of the most successful, reputable exchanges. Key levels of support to keep an eye on are the 200-week moving average, which is around $26,000, and also the average investor price, which is also the last all-time high, around $20,000. The bank's lending survey has shown that there's a massive drop in demand and also a much stricter increase in lending criteria, and these are signs of a recession. And then add to that, the average credit card debt in the US is about to hit $1 trillion, and also the interest rate on that debt has surged to almost 21%. So surely nothing can go wrong with that, right? And from what I can see, which I don't see anyone else talking about, is that recessions are not good for risk assets. And historically, markets do not price them in, and in fact, they fall during the recession. So there you are, guys, bit of a historic week for crypto. But all it can do really is slow things down. I think with all the developments, many that we cover on this channel, shows that I don't think crypto can be stopped. But let me know what you think below. And for now, just to say, if you did enjoy anything in the video, then drop a like. And a big thank you to everyone who does. And I'll see you in the next video. Bye for now.